Hey, what's up, guys? Justin here with Confident Options. Today is Sunday, August 19th, and we're looking through trades from the last week, which was 8/13 through 8/17. For those of you that are new to the site and new to the Confident Options way of trading, you can see all of our 30 days of past trades here by going to the website, confidentoptions.com. We have under Where Do I Start Trade, see our past 30 days of closed trade. Click that link. You can also go down to the coins here under the performance, and then you can also go up to trading at the top and go to closed trades. So this past week we had 11 closed trades, 10 wins, 1 loss. Of the 1 loss, that 1 loss was from an earnings trade, and we'll go through it here today. We're going to review 5 of those 11 trades and hopefully provide some value for you guys looking at what we do and how we do things. Hopefully it can add, an arrow to your trading quiver, if you will. So let's look at this first here. Microsoft, which was a core strangle position for our portfolio. Msft is the ticker. We opened this trade on 7/31. Let me get my pin out. So we opened the trade on 7/31 by selling the 115 calls and the 97.5 puts, and we collected $1.42. Typically, guys, we like to collect at least $1 on these strangle trades. There's no guide per se. When we trade defined risk trades, you always want to try to collect a third of the width of the strikes in the credit that you received. On strangles, it's more of a experience thing. There's no formula that at least that we use to do it, but we know we like to collect around $1 or more. Sometimes less, sometimes more. So it usually averages out to about $1. So Microsoft here collected $1.42, and we opened it again on 7/31. We ended up closing the trade on 8/13, so we held it for 13 days, including weekends. So take a couple days off there for the weekends days, and you actually get the number of actual trading days that occurred, and we closed it for 70 cents. So a return on capital of about 5.5%, so a really great winner for us. We've started including some sample position sizing at the bottom here, and this correlates right along with the table, a new table that I added above. So if you scroll up here on the closed trade tab, you'll see our FAQs. We basically collected all the comments and questions that we've gotten, put them at the top to help you guys understand how we display our trades. But if you go to estimate your position size and click on that box, we've included a position sizing table. So you take your account size here on the left, and we recommend no more than 5% of your account value on any single position. Trust us when we say that helps limit the risk when we have black swan events or things that occur. We don't want 50% of your portfolio in a single position. So we allocate that 5%. We always stay very diversified between different sectors and industries and position types, etc. So looking at this, right in the middle of the road, $100,000 account would get you about $5,000 per position, down to a $25,000 account, which gets you about $1,250. So what our aim was in this table that we put on each trade, going back down to Microsoft, is kind of give you a range. So this would almost represent, in this case, this would represent a $100,000 account. $5,152 into the trade, and this would represent closer to the 30,000 range, right? It's never going to be exact, but it's a guide to keep you in a certain range and not get out of control. It keeps everything very mechanical when we size and get into trades. So let's go over to the chart on Msft and take a look at what we did. So we entered again the trade on 7/31, which was this red day here. Our 7/31 was this little inside candle. So let's mark that up. So here's our entry day. Red is not a great color to use on this chart. There's our entry candle. And what we did was trade the 115 call. So that's above what we can see here on the screen. And then the 97.5 put down here. Awesome wide range for us to let the stock do what it's going to do. As long as it stays in here, this is where we make money. And so what all we want to do is trade when the stock has a high IV rank. You can see right now it's down to 24. We always usually enter when it's above 50. So we've seen some nice implied volatility come out of this. I think this was in kind of an earnings drop as it moved down, but we still had high IV when we entered the trade. So we thought it was a good trade to get into. And so the stock kind of grinded higher with the rest of the market for a while. It's still well away from our upper call strike, and then it pulled back, and we decided, all right, let's just be opportunistic. We're at our 50% profit target already. Let's go ahead and get out. So they think this is the day we got out of the trade, somewhere around there at least. And so nice trade, nice neutral trade, and worked out exactly as we hoped it would. All right, so that's Microsoft. Let's go to our first earnings trade. It wasn't our first, but one of the first we're going to review for the week, which was CDK, and it actually was a loss. And so what we ended up doing was telling the straddle, which is buying and selling a call and put at the same exact price, and we collected $2.66. So the actual expected move was $2.65. So that got us right at the expected move. And the stock actually only moved, let's see, what was it? $1.28. So it moved exactly and did exactly what we want. But let me show you exactly what happened. The strikes on this stock were $5 wide, which in hindsight, which is always 2020, was not great for trading because it wouldn't allow us to get as neutral as we would want to. And so looking at the chart on this one, CDK, sorry, let me get this to load all the data. Oh well, we can deal. So here's the day before earnings. The stock closed, we'll call it 64, a little under 64. And so having $5 wide strikes, the closest we could get was up here at the 65. So if we expand what we can see, the closest we could get was at 65. So here's where we're centered. Not a great place to be centered when the stock closes down here. So we sold the 65 call and put. It got us out $2.66 on each side. So we were up here somewhere 67.5 and then 63.5, right? So the stock ended up actually opening just right inside the range that we had, but it only made a move from 64 down to 63 or maybe 62 and 80 cents or something. So it moved inside the range. The fact that we were only able to sell the 65 calls and puts put us at a disadvantage. So looking back at it, the volume was an issue and the strikes were an issue. And so what we ended up doing, instead of holding this or letting it go like we do with all of these, is trade it right at the open. So we went ahead and got out of the trade as soon as we could, and we had to pay a higher premium than we took in. So we took in a 266, but we had to pay $3.10 to get out. Super small loss. So again, it happens. It's part of trading. So you just have to learn to deal with it and move on. And so we got out of the trade, $176 loss at a larger account, but $88 loss down here at a smaller account. So comparing a smaller account entry on this CDK to a smaller account entry on, another earnings trade that we did, we had made 210. So we were only losing about half of what we would have made on some of these other trades at the small end of the scale. That's the name of the game, though. So keep those losses small, keep your winners, keep your ratio up, and you're good to go. So there's our CDK, our loss for the week, which was a straddle. Next trade we looked at is an earnings trade in Macy's, ticker symbol M. So we got into this on 8/14. And we sold the 45.50 call and the 37 put to create a strangle, and we collected almost $1.92. We were able to close out for 46 cents, so a nice crush there and a good win. Not a really expensive trade to get into, so smaller accounts could have scaled up pretty well on this, 4 or 5 contracts, and still made a decent amount because you're returning about 10% on the capital that you put to work. We always trade the front month contracts, so the weekly contracts, the front weekly contracts, not month. So in this case, these happen to be the monthlies, but we're always going to trade the expiration that is at the end of the week for the week that you're trading for these earnings trades. Let's hop over to the chart on Macy's, ticker symbol M. We opened this trade on 8/14, and we sold the 45.50 and 37. So let's make this doable for us. All right, so we're up here at the 45.50 level. So on the upper end here, and then we opened the 37s. Sorry, 37s. So that gave us a nice range around the stock. 8/14 was our entry, and our close was 8/15. So the stock ended up moving right inside what it should have done. And so the move was 362. The expected move was 362. And it only ended up moving about, let's see, $2.90. So it was really close to the expected move, but still inside of our range, allowing us to go ahead and close out the position for a profit. So great trade there, and a nice winner. And you can see, again, sample position sizing based on your account size. 2 more to go. Next one up, CACI. This was kind of an interesting one. Good for us, actually. So we ended up opening the Strangle August 17th expiration, held it for a day, returned about 6% on our money in that day. And so we opened up the 195 call and the 165 put. Get us well outside the expected move, was like almost $10. So big expected move, but it only moved 265. So perfect for us. So we're able to get outside the range. And interestingly, we were able to close it for a nickel, which was awesome. We'll take that any trade we can get. So we captured almost 95% of the available premium, which was a good kind of case study and why we continue to trade these trades, or these earning trades, as many times as we can, as long as we have the edge in the trade, which is the important part. So apologize, I'm not sure why the rest of the charting isn't loading up, maybe because it's Sunday, but we have enough that we have to see here. So here's the close before earnings. We're up here at the 195s, somewhere up in this area, and then the 165 below. So pretty neutral, I'd say. We gave it plenty of room to move. And again, it only moved like $2, like $2.50 or something. So it opened there. We were able to just close out at both. We probably could have just closed out of the call side, since that's the direction it went. But it was so close to where it closed the previous day that we were able to close out both. And we only paid at 5 cents for it. And so any day of the week, I would have paid 5 cents, 25 cents, 30 cents, 50 cents, 70 cents even. I would have just closed the trade out and taken what the market gave me. So that's how we stay mechanical and profitable with these earnings trades. Last trade we're going to look at is a core portfolio position in STX. This was a good one for us. We needed more exposure to the technology sector. I mean, we have things like healthcare, biotech, home builders. We use a mix of ETFs as well as underlyings, and this was one of our underlyings, and it happened to be in the technology sector. We sold the 21st of September Strangle in this case by selling the 57.50 call and the 47 put. Give us a nice wide range, and we collected $1.65. So again, over that dollar threshold that we like to have. Held it not for one day. We held it from 7:31 to 8:17. So we held it for 18-ish days, including weekends. So you can take a couple days off there for actual market trading days. And this one was great. It wasn't a huge it wasn't a lot of capital to hold the trade. I think it was like $400 a contract or something. So even small accounts could trade a single contract or two and still make a good amount on their money that they put to work. And it happened to be almost 20% that you'd put to work. So a small account could trade 4 or 5 contracts and still return almost $500 on their money, which was really good. So excellent trade for us. I think we have another working position in STX just because it had high IV. And I think it still has relatively high IV. We're still waiting for some of that IV to come out. But let's take a look at the chart real quick. So we entered this trade on 7:31. Let's pull up 7:31 here. So here's this red candle going down was 7:31. So this is our entry candle. And we ended up selling the 57.50. That's up here, if I can draw a straight line, and then 47 below, which was under the screen here, even below where this is. So the stock kind of grinded higher after we got in, which was fine, because remember, as long as it stays within this range, this is where we profit. So the stock grinded up, had a big gap down, kind of in the middle of our trade here, and then it continued to immediately move back up. So this is exactly what we want it to do: move around, gap around, do what it's going to do, and we're able to hit our profit targets and get out in just a matter of weeks, under 18 days. So really good trade for us there. And again, it was a cheap trade to get into, so you can capture about almost 20% on your money. So that's it, guys. That's 5 of the 11 trades that we closed. Head over to the website to see the rest of our closed trades. Hope you guys have a fantastic week, and we'll talk to you next time.